Hello and welcome to another update video about Natgas. Not too much has happened. Prices come down a bit actually in the last couple of days, but bigger picture, no change. In fact, the price has reacted to the resistance area that I've been highlighting in the last videos. So seems to have worked out. These areas can, of course, the same way that support areas can be used for entries, these red areas can be used for short trades, for example. At least there is, in my opinion, when I put these on the chart, a decent likelihood of a rejection. We had a double top. I think we looked at that in the last video, and then this price channel, and it started the week with a gap below the price channel. So I think it was very timely to make you aware of that resistance area here. The reason why I gave you that area and showed it to you was that after a 5-wave move to the downside, we have to, and given the context of the chart, which I explained in previous videos, where we said, okay, primarily we focus on higher, but of course it is the market that will decide, right? And we have enough waves in place to count actually this entire wave 4 complete. A wave, B wave, C wave, and the C wave in 5 waves. 1, 2, 3, 4, 5. Okay, and then also the C wave, if I label it like that, reached the 100% Fibonacci extension level of the A wave, which is spot on, normally what you want. But given the context of the chart, looking at Fibonacci retracements, it seems more likely that it will still go higher. Yeah, it's at a major inflection point now, okay? So this was obviously a potential resistance level, and I gave you in the last video, before we got that rejection, the yellow wave count, which would be the path, the direct path to the downside. So it is, of course, at the moment still possible for it to move higher in this ABC structure, where the C wave is an ending diagonal. And yeah, we could be in this C wave just now, right, and push higher, because nothing happened really. I mean, yeah, it got rejected, but if it now turns around and rallies, it can still do that. However, it's also still in the price channel. Okay, my view that I gave you was that, okay, look, a very, very early signal that the yellow wave count, the most direct downside path, works out is if we get rejected from the resistance area, break below this descending trend line. Now that happened, okay? An even stronger signal that the yellow wave count is playing out is a break below the ascending trend line of the trend channel. That hasn't happened yet. That will be potentially a break below 249, okay? And if it then breaks below $2.14, which is this wave 2 low, yeah, I think then it's confirmed that we're heading down in this C wave. Now it's too early to confirm that, but from a trading point of view, this was a, you could say, high reward, low risk short trade. Even though, and this is a misconception that many people have, that even if the primary scenario, for example, points still to the upside from an analysis point of view, it can still sometimes be wise to take, for example, a trade in the alternative wave count if reward and risk are favorable. In the worst case, you get stopped out above resistance, right? That's sort of, yeah, it's all about reward and risk, right? And this is where analysis and trading differs from each other. But, you know, even here, this was not a high probability setup or anything. But nevertheless, this is a major inflection point. And I gave you in the last few videos, the levels already that, if broken, will emphasize the yellow wave count. Either way, whichever scenario is playing out, you know that we still favor another low. We have to, because this is still very corrective price action, right? And until we have clear evidence that something really bullish is going on, it's difficult to make a more direct path to the upside primary scenario. I don't know how to justify it. The only way to justify it is to say, okay, of course, you know, in an alternative wave count, the overall low, the bear market low, might be in here. We talked about that many times. But what is this? This is just a corrective mess, okay? So from that point of view, it still points to the downside, or it would need to give us some evidence that it's, you know, that we're already in the third wave rally to the upside. Now, I still expect higher anyway. So from that point of view, it's covered already, that upside. But let's see. I mean, what I'm doing, I'm still focusing on upside. Eventually, though, one more low. If we go down more directly, then it is what it is, right? The levels are well known. We had a nice short setup here. And if we go down more directly, at least this overall correction is finally getting finished. So yeah, this is sort of my take on the Natgas chart at the moment. The levels are defined, and I mean, this yellow wave count can now play out as long as price stays below the Friday high, which was here at $2.85. That's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.